SMEs. We train them about financial literacy, we train them about their supply chain. So I think that's also a challenge for us to think about how to integrate knowledge about the trade agreement, the benefits that they can be expected to accrue from participating. I also think, just from discussions that we've been having leading up to the summit, cultural integration is core. And even when we think about the diversity of languages that we speak, it starts with simple things like making sure everybody learns French, learns English, a common way we can interact with each other. I've also been reflecting a lot about what one panelist, I think he will come later on in the day, Bright Simmons, said in a webinar I attended. He has written a very interesting article in the Harvard Business Review about the idea of nano multinationals. So very small businesses, but then with a regional and global footprint. And I think when I think about the way in which our businesses work and some of the core principles that are espoused by shared value, this idea of trust being a basis for the way in which we interact with this agreement and scale it across these small businesses is something which we really have to think very carefully about. I think it could be a very interesting model that we could showcase to other countries, where we show them how small businesses here can work regionally based on trust. I'll also invite Mba just to give any observations he has made. I'm sure he also has many things to say to that.
I think for me, I would agree with what Dr. Tuwele said and said, look, you gotta simplify the free trade agreement for the SMEs. But in simplifying that, Ayabonga's questions are similar questions that I would ask, even if I was an SME or a small business, and what's in it for me, right? If I trade with my colleague in Kenya, or I trade with my colleague in the DRC, or in Cape Verde, which currency do I get paid in, and when? If I'm to sign up to a payment platform, what are the exchange control, what are the exchange gains, what are the exchange losses, what are the risks involved? Are there any fiscal incentives for me to really be part of or really utilize the free trade area? I mean, we can have, it's a good idea, but until you simplify it to the very basics, that someone who's in agriculture or someone who needs to order cloth so they can make a dress for Fifi needs to understand, how do I get paid is one of the key things that is going to hinge on this free trade agreement. So maybe at the same time that we're driving this free trade agreement, we also need to decide as Africa, what is the base currency? So Dr. Kibo mentioned the European free marketplace, but that's based on the euro, right? So in our cases in Africa, which currency do we use? Do we use the naira? Do we use the rand? Do we use the Zimbabwe dollar? Do we use the shilling? What currency do we use? And also, how do you bring about different fiscal or monetary regimes across 54 nations to agree to this? So these are one of the things that, some of the reflections that I have. But without further ado, I think our next session is on leadership views on accelerating economic growth. Now, Fifi knows him the way she knows him, and the bio I'm looking at knows him the way doesn't know the way I know this next speaker. But anyway, Ayabonga Kawe, I envy him because he's got a better beard than mine, weighing in somewhere between Os Durant and Bakis Bota. Ayabonga is a Johannesburg-based development economist, columnist, broadcaster, activist. He is MD of Baby Jesus, please don't let me murder the name of his company, Cesibe Holdings, a platform involved in advisory, facilitation, and content development across a wide range of fields. He also hosts Metro FM Talk on Metro FM and writes regular columns for Business Day. Without further ado, Ayabonga, welcome to the stage.
Thank you so much. So it wasn't too difficult, Mba. Wasn't too difficult. Ladies and gentlemen, good morning. And as Mba has already said, my name is Ayabonga Kawe. I'm a broadcaster, I'm an economist, and I also, I guess, happen to dabble in a bit of teaching as well. And I was sitting frantically writing notes during Fifi's session, because I do think that a lot of what we're speaking about here could potentially be the case studies for very deep inquiries into trying to understand some of these really unprecedented social changes that we're faced with in the continent and beyond it. Of course, this morning, I have the fortune, I must say, of getting to speak to a few business leaders and getting to hear their perspectives on how they are grappling with some of these changes, what they mean to their operations, what they mean to them as leaders, and more importantly, how their enterprises and their leadership strategies and styles will respond to these changes. And a lot of them have to do with what was discussed in that session on the Africa Continental Free Trade Area. How do we break down, in many ways, the commercial borders between 54 nations with their own flags, with their own agendas, with their own interests, in order to create a common marketplace? Because we often say here in South Africa that a market of just shy of 60 million people is certainly not a big enough one to influence some of the micro-level decisions that business people and many other people make on a day-to-day basis. It's a pleasure for me to be here today, and I want to thank the team at the Shared Value Africa Initiative for the invite. I think, Tiki, I've been here since the first one, and it's always a pleasure to get to speak to people who are engaged in business, but who are beginning to think about questions of the triple bottom line in a very innovative way. And I certainly know that many of the panelists who are going to be joining me on the stage and also on Zoom in the next few minutes or so certainly are cut from that type of cloth. So allow me at this point to first welcome two of my panelists who are with me here in person. And it's great, I think Fifi touched on this, very great to have the opportunity, coming as we do from the last 18 to 24 months that have been really difficult, to be able to meet one another in this way. And I'm going to call up William and also Adiolu to join me on the stage. I'll say a bit more about them and the work that they do. Also going to be joined on the... Yes, yeah? Please. I share Fifi's sentiment that we kind of need to get used to being in a room together again. We have to get used to clapping, right? We have to get used to preparing ourselves to make inputs and contributions. And so please give William and Adiolu another round of applause for us. I also have on Zoom, who are joining us, I guess, virtually and living vicariously through all of us, I guess. Ian Williamson from Old Mutual, also joined by Peter from Safaricom, and I'll say a bit more about them when they get an opportunity to give some opening remarks. But suffice to say that it's a real pleasure to be with you all this morning and to have the opportunity to get some reflections from leaders in the world of enterprise who are faced in many of their organizations by unprecedented change, but also as members of the communities they come from. How do they grapple with this change, and how does it inform, of course, the pursuit of an economic growth path that is inclusive, an economic growth path that recognizes that the digital, energy, social, and demographic transitions that we're faced with are certainly going to bring about changes that require agility and flexibility to respond. But also, in many ways, what does all of this mean for small and medium-sized enterprises, and what does it mean for commonly shared and inclusive prosperity on our continent? So what we're going to do is we're going to start with the people that are joining us vicariously through the interwebs. And I'm going to start with Ian Williamson, who's been at Old Mutual since 1993. Now that's a long time ago. I mean, a lot of the people in the room might not have been born by then. Or maybe not. Now, Ian Williamson's been there since 1993. Old Mutual left and came back, and Ian's still with them. So certainly he has the staying power of somebody that is often, I guess, uncharacteristic for many of those in the financial services sector. But Ian, let's give you an opportunity to give us some of your opening remarks and some of your own, I guess, reflections on what we can do to not only just accelerate growth on our continent, but do so in a way that is inclusive and whose distributional consequences are something that all of us can live with. So let's give you an opportunity and welcome to the platform, Ian.
Oh, thank you very much. It's a pleasure to be here, and thank you to Tiki and the Shared Value Africa for the invite. Like you, we've participated in this discussion for a few years now, and it's very much, one, close to my heart, and two, very much a part of how we think about business at Old Mutual. So maybe just to preface my remarks with a few things, I think the African continent is obviously as you said, 54 nations of fantastic cultural and language diversity. What it has going for it, I think, in a global context, at a very fundamental level, is probably the most favorable demographics of any continent in the world. We have the youngest and one of the few remaining growing continental populations in the world. And from the perspective of Old Mutual as a diversified financial services supplier, and specifically as a insurance supplier, a very underpenetrated market for both financial services and more particularly for insurance services. And insurance, I think, has a fundamental role to play in the economic growth of nations and of society, both from two perspectives. First of all, the fundamental need we fulfill is to help companies and families and individuals to recover, both financially and in other ways, from unanticipated events. So if you think about COVID and its impact on the continent, we've had an unprecedented level of deaths across the continent in the last 18 months. And we've had businesses being affected dramatically in their ability to trade, thanks to government intervention to protect society from the spread of infection, but that's obviously had an impact on businesses' ability to conduct their business and to go about their business in normal ways. And insurance fundamentally exists to protect those players in the economy from those kind of events. But the second thing that it does, which I think is probably less appreciated, is it is essentially a mobilizer of savings. So what we do, the way I think about it, is we gather contributions from people on a monthly basis, and that could be towards their pensions, towards saving for their children's education, or towards contributing towards life cover, or indeed insurance for their cars or their house. And that money is then pooled by the insurance company into a material sums of money. Old Mutual manages over R1 trillion in assets. And many of those assets come into our hands on a fiduciary basis, that money belongs to the client, but have a long-term investment horizon attached to them. So we both become custodians of significant pools of capital on behalf of our clients, but equally are able to invest that capital with a long-term horizon, which makes us ideally positioned or uniquely positioned to invest in things like infrastructure, whether that is solar energy, wind energy, toll road construction of student accommodation for universities. All of these examples I've quoted are assets that we physically invest in today and have invested in for some time to come. And that's quite aside from funding, listed companies on the stock exchanges or providing companies with debt funding to keep them going. So I think that puts us in a unique position to apply our minds to how we go about that investing activity. And our philosophy is very much one of responsible stewardship of client funds. Whether we think about that from the perspective of the needs of the economy generally for infrastructure or for the provision of facilities, or if we think about that with, given the topicality of COP26 at the moment from a climate lens, what's the role that we need to play as a responsible steward of that money to ensure that it's deployed in the most advantageous way? And then the final thing I would mention is the role of education, whether that is financial education or particularly in our case. I believe that there are no countries actually in the world that do a particularly good job of educating their citizenry around the basics of managing your own finances and thinking about them appropriately. And I think we play, therefore, a really critical role in helping people to understand the criticality of managing their finances appropriately for the long term and providing appropriate access to both the educational tools as well as the means to invest the money efficiently and for good long-term benefit. So to that end, I think two things in the current environment. One has been the challenges of access during lockdown periods and such like, and we've had to dramatically accelerate, I think, like many other companies and industries, the digitalization of our business. And the primary lens that we've adopted in going about that activity has been around how do we improve access for customers and potential customers. And the other thing we've done is we've thought quite hard around how we think about financial inclusion and financial education. And we've constructed a rewards program for our customers, which I'm really proud of. It's one of the fastest growing rewards programs in the last 2 years in the financial services sector, certainly in South Africa. And essentially it's constructed around rewarding people for taking the right actions to safeguard their financial futures. We refer to it internally as encouraging customers to eat their financial Brussels sprouts. It's not always fun dealing with your finances. Repeated surveys around the world have shown that people hate budgeting and financial planning even more than they hate going to the dentist. So how do you reward people for undertaking activities which they fundamentally would prefer not to be doing immediately? And how do we make that a more pleasurable experience? So in short, I think Africa is a very exciting place to be at the moment. We all know the challenges, and I think many business leaders and business executives in Africa have really cut their teeth on a very tough operating environment with a fair amount of volatility. But equally, I think it's a continent of fabulous opportunity thanks to the demographic dividend and the maturing of the economic value chains across the continent in general. So thanks for that opportunity, and I'll hand back to the rest of the panel to give them an opportunity and share the time fairly. Thank you.
Thank you very much for that, Ian. And I guess it could only have been Brussels sprouts. It couldn't have been carrots or anything like that, because I guess of the colors involved. So we'll certainly give you that opportunity. No, not a problem there. Let me call up the next business leader who we have on the line, and that is Peter Ndegwa. He joins us all the way from Nairobi. He's the CEO of Safaricom PLC. A quarter of a century worth of experience in the, well, not necessarily in the financial services sector, across a wide, diverse set of sectors, and somebody who will certainly be following very closely the latest developments coming out of the Horn of Africa, and he'll maybe tell us a bit more about some of his thoughts and reflections on that. So Peter, let me hand over to you, and look forward to some of your opening remarks.
Yeah, thank you. Good afternoon, and thank you, Ayabonga, for the intro. And good afternoon, everyone, and my fellow panelists, and also all attending online. And I would like to thank Techie and Shared Value Africa for inviting me again. I participated last year when we were reflecting on purpose-led leadership, especially as we handled the crisis. So I'll talk about Safaricom for those who might not know. I've been with Safaricom for just over 1.5 years. I joined in the middle of the crisis last April, so went through onboarding during the crisis. But Safaricom is the largest telecommunications business in Eastern Africa, and also the pioneer for mobile money, M-Pesa, the world famous M-Pesa. And today M-Pesa in Kenya has 28 million, and across Africa in total 50 million. We crossed 50 million recently from when you add the Kenya numbers to the rest of Africa. And the other aspect that is quite special about Safaricom, although it's only 21 years, so we are celebrating 21 this month, is that it's been a purpose-led business, really goes well beyond commercial objectives. Has wired, we wire the way we think about business. We wire purpose in the way we think about business. And that's one of the reasons why M-Pesa came into play. We were looking for a way of solving a societal problem, which was financial inclusion. And although we are in connectivity business, we decided that we would deal with the aspect of financial inclusion. And that's how M-Pesa was born. And today M-Pesa is kind of ubiquitous as a brand, and many people in Kenya and across the region don't carry their wallets because they have their mobile phone. So even as we experienced the crisis during COVID, connectivity and financial inclusion became central to how the countries coped with the crisis. We were involved heavily in partnership with others to make sure that we could support the society, but also government in reducing the impact of the crisis with zero-rated transactions here in this country below $10. And actually, in total, we gave 1.7 billion zero-rated transactions worth about $40 billion US across the M-Pesa franchise. So a couple of things that we've seen, and we realize just how important connectivity is. The crisis really showed how important connectivity is, and the difference between those connected and those not connected, and also even the difference between those who have handsets that are kind of basic handsets, 2G handsets, versus those who have 4G enabled handsets, and the importance of upgrading customers from 2G to 4G as it improves their ability to access the internet beyond calling, voice call. Access to the internet became a lot more important. And in partnership with Google and others, we have now come up with a pay-as-you-go proposition that allows customers to upgrade their 2G to 4G by paying a small deposit of $5 and then paying 20 US cents every day off their M-Pesa. So two things there. One is the importance of connectivity. The second is using digital financial services to enable lifestyle in a way that is that works in a remote environment. And we normally also say that M-Pesa is a barometer of how the economy is operating, and we've seen significant impact of digital financial services since we started M-Pesa. So financial inclusion, and Ian spoke about some of that. Financial inclusion in Kenya has shifted from the mid-20s, about 13 years ago when M-Pesa started, to now in the 80s. And that is significant. And financial inclusion in particular has benefited women because we know the women are the core of the economy. And more financial independence, not just financial inclusion, but also financial independence. And even as we think about adoption of digital going forward, it's about broadening it to beyond payments and P2P, persons to persons transfers, to actually becoming a lifestyle brand. So during the past 18 months, we've seen a significant shift in people's use of digital ecosystem. So we recently launched an M-Pesa app in Kenya, and already within 3 months of launch, we have 4 million downloads of that app, and it's becoming kind of a lifestyle tool. So we do believe that as the country and as the region and as Africa digitize, we can be able to empower individuals to live the lifestyle they want, but also SMEs in particular and micro SMEs to adopt in a cheaper way so that their business is more effective and more costly and more cost effective. Digital channels that allows the enterprises to do business in a way that is more accessible, more affordable, and also they can interact and connect with their own customers. So the power of collaboration, the power of partnership, we can't do it alone, and the power of bold leadership. So ensuring that during this period, whether that is managing the crisis and going beyond in terms of the recovery process, partnering with others and understanding that bold leadership and bold decisions are required in order for us to empower individuals and enterprise to live their lives and conduct their operations in the best way possible. So looking forward to the conversations today, and looking forward to how we enable recovery across the region using digital financial services and connectivity products.
Thank you very much. Thank you very much for that contribution, Peter. And Peter Ndegwa there, the CEO of Safaricom PLC. And I guess one of the things he touches on is this issue of convergence. All of the banks are telcos, and all of the telcos are banks. And I guess some of the retailers might be a semblance of both. And that's something we'll come back to, and of course what implications that has for SMMEs as well. Now let me come to my guests who are with me here on stage, and I want to first get some inputs from Adeole Adewomeze, who is with Allianz Nigeria Insurance, where she is the CEO, and 2 decades worth of experience in the financial services sector for Adeolu. She's an avid coach, mentor, and also an avid runner as well. And Adeolu, I want to welcome you not just to the platform, but to South Africa as well. And do share with us some of your opening reflections as well.
Okay, thank you, Ayabonga. And I also have to thank Tiki and the team. I believe this is the 4th time you've been able to snag me for one of your events just this year alone. I'm not sure how we found each other. I don't recall anymore. But it's nice to finally, this is the first time we've actually seen each other in person. And I'm glad to be here in Johannesburg in South Africa. I think Ian has done a great job in talking about the challenges insurance has faced across Africa, looking from the Old Mutual side. So I'd rather bring it a bit more personal to the challenges over the last 2 years for me as a person living in Africa, and for one small business in one rather large country in Africa as part of the bigger Allianz family. So 2 years ago, I'm currently based in Lagos, Nigeria, but 2 years ago, I was based in a different country doing a different job. So when COVID hit in, let's say, January, February, March of last year, I was based in Nairobi, Kenya, running mergers and acquisitions for Allianz across Africa. Looking to sign a deal, the largest deal actually in financial services in East Africa, named Deal of the Year for 2020. And at the same time, as a mother of two small boys, a 7-year-old and a 5-year-old, who all of a sudden landed in my lap at home, having to be schooled. So this is a story that might be familiar to a number of you. And so I realized very quickly that I'm not cut out to be a teacher and that I have very little patience. But it was interesting to see over the last 2 years how COVID and the challenges that COVID brought to the world brought our family together, but also brought our family apart. And I'll explain what I mean in a minute or so. So going back to that year, like I said, with two small kids, having to be schooled at home, trying to balance one of the largest deals of my career with having to manage as a working mother at home. Also a sister and a daughter. So I had my father, who, with my mother late, was actually in lockdown, complete lockdown, in a new city where he had taken a new job, not knowing that this situation was about to hit. So supporting him emotionally, also having to support my family very physically, and also run a mergers and acquisitions deal. So this was my life for a number of months. This was the life of many of my colleagues, of many of you. Then a few months into it, as we were starting to find our pace, starting to figure out how this all works, even the teachers, we were starting to come together. Then I got a call that I was needed in Nigeria. And as a Nigerian, of course, that was a dream come true, but the timing was less than ideal. And so one of the first decisions I had to make, and I had to put my foot down and say, I'm not moving my family in the middle of a global pandemic. So for 1 year, I actually had to commute 5 to 6 hours between Nairobi and Lagos every few weeks, running a company that was going through a transformation of its own in a quite difficult business environment. So Allianz, we came into Allianz 2.0. One of the things that the pandemic did for me as an individual, but also for the company, is to help us to redefine and refocus what we want our purpose and our vision to be in the society that we're in. And we'll talk about some of that later, and we're talking about some of that over the next 2 days. But we really did a pivot, looked at our purpose, looked at our vision, looked at the culture that we're building within Allianz in Nigeria, saying that we want to secure the future. We want to secure the future not only of our customers, but of ourselves as employees. What does that mean? What do we need to change in a post-COVID world? Looking to see how we can use digital tools so that our employees could remain safe, not just for the short term, but for the long term, because COVID also did bring opportunity to realize that we could do business differently, to realize that we didn't all have to sit here, 300 people, which is also very nice. But there's a benefit to this hybrid approach where people who are not able to travel, people who have other commitments, can participate in an event like this. People who live long distance from their workplaces. Lagos is a city of over 20 million people, where people sometimes have to sit in traffic for 3, 4, 5 hours one way. And all this lost time has been given back to our folks as they're able to work from anywhere. So we have a hybrid working approach as well, just like we have the hybrid conference today. So going back to my point about my family coming together, but then my family also now being apart for the last year. The good news is that 2 months ago, I was able to bring my family over to Lagos. So now we're all together in Lagos, dealing with all the peculiarities of that city. And as Allianz, looking forward to the end of a tough transformation year, but now we can start to look external, so that the value that we want to bring to the society that we've already been building within our company, we can also then turn external and look at what value can we bring to MSMEs, starting with individuals. I'll talk about the MBA program that we just set up, but even going wider into risk management solutions in different travel or in health insurance or other agriculture, other areas where these are the drivers that will bring Nigeria and Africa as a whole to the place where it needs to be.
Yeah. Thank you very much for that, Adeolu, and we'll come back, I guess, to some of what you're sharing around what the strategic shifts in your own organization might mean for many other Nigerians who have been experiencing the same, I guess, operating environment, least of all many of the SMMEs and micro SMEs in that neck of the woods. Let me bring in William Dachs now. He's with the Gautrain Management Agency. And William has decades of experience in structuring and designing public-private partnerships, because a big part of what were speaking about earlier, was that the immensity of the challenges that we faced with don't lend themselves to just having one stakeholder resolving them. And a big part of the resolution process will require collaboration. It's also going to require some form of partnership. And I guess no better partnership, William, than the one that's just down the road. And I know many of the people who are joining us in the room might have come via Gautrain. I certainly hope they have. Yes. But this has also been a very difficult moment for yourselves, people not commuting as much as they did before. And look forward to some of your opening remarks on how the Gautrain Management Agency is grappling with some of this.
Yeah, thanks, Ayabonga. Got to start off with a personal note here. First of all, I love our product. The Gautrain is fantastic. I myself came by train this morning. Second sort of personal characteristic, I'm a jaywalker. Waiting for traffic lights is not my business. And I think I speak on behalf of most people on this wonderful continent of ours. But I was really worried this morning because to get from the station to here, I jaywalked with ease. There's no traffic. And I walked past a lot of shuttered restaurants. I walked past a lot of to-let signs. All the big property agencies are putting up big signs. Sandton's empty. Sandton's empty. And remember, Sandton is the economic heart of South Africa. I'm going to say Southern Africa, and it's a big part of the African economy as well. So let's put a pebble in our shoe. Let's not be comfortable. We have an economic crisis in the country in South Africa, but I suspect that it's probably across the world, across the continent as well. So we've got to have some good discussions about how we can transform that, use partnerships. But maybe just to reflect a little bit on my journey, our journey in the Gautrain Management Agency. I was in Sandton 20 months ago, I think it was, and the president, I think that very day, announced the lockdown, and we had to pull all our trains in, power them down. It was a very sad moment. And I remember thinking, what are we going to do? How do we manage this? And I think sort of 4 points as I was jotting down this morning. The first is that there was that deal with the immediate. You know, how do we get through this? First of all, we had to protect our assets. You know, the rail line, the copper cables, everything. You know, when you're not running a train, they get very vulnerable. Protect jobs. We went to our partners and we said right up front, no one loses their job here. We as leadership have got to make sure that that jobs are protected, because we're going to emerge from this. We don't know whether it's short to medium term, but it's not long term, and job preservation is important. And obviously, we had to protect our passengers. Ayabonga, you might remember we had some good stuff and some bad stuff. Our spray booths were bad stuff. I don't know if you remember that one. We sprayed our passengers in the mistaken belief that would somehow get rid of COVID. But it was kind of, I would defend it strongly in dealing with the now. Second note that I made was to stay calm. Right? Too soon to panic. And I think from a leadership point of view, that was very important in terms of not just the team that I work with, but in terms of our shareholders, our stakeholders. It's very important that there be this sense of it's going to be okay. You know, we'll get through this. And linked to that is staying positive. You know, and I think that was very, very important in terms of just being able to say to people in our team, our partners, the Bombela Consortium, again, we're in this together, but we're going to solve the problems. And we started off in that May 2020 from zero ridership. We had to rebuild our business. 4th of May, we opened up to 3,000 or 4,000 passengers, where we had been doing over 60,000 passengers a day. We had moved 150 million people, by the way, in the 10 years up to that. So staying positive and rebuilding the business. But kind of the 4th point is the most important one, where I think we need to come back to this economic growth, is thinking long term. And I'm so afraid that we kind of, as a country, we fall into short-termism. What do we do today or tomorrow? William, how many riders have you got? What's today's ridership? How many buses are running at the moment? Those aren't our challenges. Our challenges are the economic impact of good, well-planned infrastructure, and how do we get that going? And secondly, climate change. When we calculate how many tons of carbon dioxide emissions we've saved over the last 10 years, and we extrapolate that and we say, but how do we continue having that impact? And what happens if we don't do it? We're keenly aware that that's an absolutely critical environment. Also thinking long-term, something I'm really worried about is congestion on our roads. Our expert economists tell us that a competitive city needs mobile people. A competitive country needs mobile goods. And at the moment, I'm a little bit worried that we're going to become complacent and we're not going to have mobility for people and goods. And that could really hinder our growth as a country. And again, I'm sure that's true in most countries in Africa.
William, thank you very much. And I maybe want to start, I guess, with a question for all of my panelists, but starting, in your part of the world, in our rail network. A big part of what we're trying to face as we think long-term now is about not only just ensuring efficiency, but assuring resilience of these systems, resilience of your assets, of your processes, of your business, and of course the resilience of our broader economy. You spoke earlier on about, I guess, the task of protecting some of your assets. We've seen, even during July, the tail end of a continuing process of the stripping of assets, least of all in our rail network. Some of your thoughts around how you see the Gautrain as a model contributing to the resilience of the South African economy. And even, I would argue, I guess, to the resilience of the more underperforming passenger rail system.
Yeah. So I'm going to be very careful not to jump into other people's territory here, but
Sure.
very happy to talk about from a Gautrain perspective. I think Gautrain works because the PPP is structured in a way that asset preservation is a contractual requirement. So if you think from a private sector point of view, taking on that risk, right in 2005, 2006, Bombela, our private party, had to think about long-term asset preservation and maintenance. They had to fund it, they had to go to their equity investors, to their banks, to say, will we have enough money in 2020 to maintain and secure the assets? Now, across government, we don't normally work like that.
Sure.
We kind of build and hope. So there's quite hard contractual elements to the PPP that really make it work. It's forward thinking, it's risk management, and it's resulted in us, never mind just COVID and asset preservation from theft and vandalism, even prior to COVID, Gautrain is South Africa's only A-rated public infrastructure in the whole country, as rated by the South African Institute of Civil Engineers. So there's a history of good planning and good maintenance, and that's key.
Yeah. Adeolu, similar question, I guess for you and for Ian. You guys are in the business of ensuring that you're smoothing the shocks of an economic actor, right? From the household to the firm to the small mom and pop shop in a corner. And I'm interested in how sort of this notion of resilience fits into your work, because effectively you're doing something that has a direct impact on the ability of people to bounce back from those shocks. What are some of the big shocks that you've seen in your key markets? And maybe we'll start with East Africa and also touch on the Nigerian market. For some of the smaller guys in the sort of distribution of firms that you might have on your books, what are some of the big things that you've seen where you can say this one is a particular insurable risk that is bound to be made a lot worse by the COVID pandemic and, of course, I guess whatever path it takes from here onwards?
Right. Yes, thank you for that question, Ayabonga. So I would say, and I'm sure Ian can share some of these, is that the biggest risks right now that we're seeing across Africa and across the world are related directly to the pandemic.
Sure.
Right? So when we look at business interruption risk, where the transport of goods and services are not as easy anymore. Even just sourcing materials. We saw that a lot of materials were coming from China, to the US, and there were a number of things that were no longer being able to be made because in the past we went to the cheapest source to manufacture, and it turned out to be China, and so there was a lack of diversification as to where things were being made, and that was the impact. Then we see cyber. So I love working from home. Many people love working from home and virtually, but there is a downside to that. It means that many of our employees are working in locations where, despite all the tools and firewalls and things like that we put in place, our human nature being human nature, they might work outside of that. And this then opens us up and many companies to cyber risk. And we're seeing the impact of that globally, where cyber used to be a very manageable risk that Allianz itself is one of the largest insurance companies or insurers of cyber risk. But now we're coming to a state that cyber is almost, or the risk around cyber is almost becoming a pandemic of its own.
Yeah.
And then how do you manage that risk when it's a risk that everybody is exposed to? So it almost becomes unmanageable. So I would say that those are the two key areas. Of course, there are particular sectors that have been quite hit, travel and hospitality being the obvious one. And so Allianz Nigeria has done some mitigation around updating some of our products and solutions to cover the impacts of COVID and other pandemics that weren't considered when these products were put together.
Yeah. And I guess just on the issue of cyber risk, I mean, if there's any major entity in this economy that has faced that particular challenge, certainly it has to be Transnet. And I would be interested to hear some thoughts. Ian, same question to you, I guess, by way of some of the major challenges that have been brought about by the pandemic. Adeolu speaks about business interruption risks, but one would also think, I guess, there would be a wide range of insurable risks that have certainly shocked many small and medium-sized enterprise, and I guess disturbed or delayed that path of growth into becoming a much larger entity.
Yeah, for sure. I think, Adeolu's spot on with the big ones from a, let's call it a property and casualty perspective. The two other areas where we certainly saw large claims were both on the trade credit side. So because of supply chain disruption, you ended up with small businesses in particular in a quite a significant cash flow crunch, and their ability to service their suppliers' invoices timelessly was impacted significantly. I think the likes of the hospitality industry, the property industry, the average landlord was really struggling, severely impacted. And then, of course, Old Mutual has a bigger life book than it does short-term insurance. So the straightforward impact of COVID on illness, health insurance, and mortality and morbidity, very, very significant. And I think that's triggered a conversation globally, I think, amongst the reinsurers and the global system of whether pandemic risk generally is adequately priced for and how that needs to be thought about going forward. So many of the insurers, the direct writers such as ourselves and Allianz would have reinsured or laid off much of the risk to global companies, and the biggest losses globally have ended up there. So the reinsurers are thought leaders in a sense in the global risk management industry around this, and are having to think very hard around whether our current risk management models adequately allow for not COVID as it were, but other pandemics that might come along in the future. And I think the two biggest topics of conversation in that environment at the moment are climate risk for the future and pandemic risk for the future.
Thank you for that input, Ian. And I don't want to, stay too much in the risk matrix, because I guess we might end up overlooking some of the opportunities. And maybe, Peter, let me bring you in here. As a major regional and continental telecoms player, I guess the fact that many people have been working from home, have had to be tooled accordingly to do that, has meant massive surge in demand for one of your key products, and that's the provision of data for connectivity purposes. What opportunities have come with the pandemic, and more importantly, what do they teach us about how we get many of our economies on a sustained growth footing?
Yeah, thank you, Ayabonga. And you're right. And just before I leave the risk, I couldn't avoid the temptation just to.
Okay, no, it's fine. Go ahead.
To say a little bit, because we are in a technology business, so we provide connectivity and mobile digital financial services. So, and the risk component is more in the context of just now we are an essential service, and the countries rely on us. So it's no longer just about risk management, but providing stable, secure, safe, user-friendly, kind of accessible services is fundamental, and you're almost systemic in the way that M-Pesa and digital financial services play in the lives of both individuals, but also micro and SMEs. So cyber data privacy, for example, become a lot more important. Just stability, being able to connect today on Zoom. If we went off, you don't have a chance to be able to have this type of connection. So, but just going back to the opportunity, we have seen significant growth in demand for access to internet on the connectivity side, whether that is at home. So, for example, last year in Kenya, we doubled bandwidth across our fiber to home and also fiber to business, to the extent that business was open, just to give that reassurance to individuals and businesses that they could work from home, and that capacity has been fully utilized. On the mobile connectivity side, we saw significant surge in demand, and we build a lot of capacity on 4G. Now we are in Kenya, we are 95%, and you've seen all that utilized. So we are seeing huge demand for connectivity, but also we are seeing a lot more demand for even in areas which we thought were not as important. Everyone wants to be connected. And on the digital financial services, which is on the M-Pesa side, we've seen, of course, huge increase, especially as with zero-rated transactions, more than 50% increase in transaction value. But also businesses demanding to do transactions remotely, enabling digital commerce, starting to also think about different ecosystems like education, demand for kids to be in school, health being delivered remotely, or even other systems. So the reliance on digital ecosystem becomes a lot more important. And on the financial services side, beyond payments, just starting to broaden. I know Ian spoke about insurance, saying, I mean, it has shown just how big the gap is in terms of under penetration of insurance or savings and so on, and those can be delivered through digital ecosystems. So there's huge, and then cross-border piece becomes even more important.
Thank you very much, Peter, for that comment. And maybe, Adeola, I want to bring you in here, because one of the things Ian speaks about is the pricing of risk. Critical input, I guess, in your operations, pricing that accordingly, making sure that you also covered adequately on your end. And I'm quite interested, I guess, in this penetration that Peter's talking about, of smartphones really, I guess, becoming a bank in your pocket in a way. The type of data points that come through there, do they help you in better pricing some of that risk? Especially when it comes to customers who ordinarily would not have had a bank account or don't have a bank account, and this is their primary, channel to financial access?
Well, the short answer is yes. So data has become king, right? And so companies who are able to utilize and leverage and collect that data will have the advantage. In some markets, it's easier than others to collect that data. I would say that in many of our African countries, unfortunately, we don't have the sort of technological infrastructure in place to collect as much data as we would like. Kenya does a bit better in that area. If I look at just a very concrete example, in terms of getting just the financial data of our competitors. In Kenya, that comes out every quarter. So, and in Nigeria, we're still struggling to get the financial information from 2020, and we're already at the end of 2021. But governments have recognized and regulators have recognized that data is critical, and regulators themselves are becoming digital so that they can actually ask companies to submit data like this. We can start doing analysis. We can start understanding, if I take the motor industry, how people are driving, how far they're driving, what kind of risks are involved in the way they're driving. And this is the way that you can make the targeted solutions to be better. Pricing, everyone always complains about the price of their insurance products. But the better the data is, the better that pricing and more individual that pricing can become.
Sure.
So I can say that, Ayobongo, you are a certain age, you have a certain, you're working in a certain sector, so your price will be different from maybe William, who's a different age, working in a different sector. This is where we're heading in terms of pricing.
William, let me bring you in here, because I guess a similar point applies, although yours would be largely from a mobility perspective. I mean, I remember the first few weeks of the lockdown, there were all of these mobility heat maps that were being published. Just showing us, how few people are moving through the malls, how few people are moving through public transport, transit nodes. How much of that data filters into your own planning of your service? Because a lot of people have said one of the things that can grow this economy is to have a vibrant nighttime economy. I'm not going to go out to the pub very late at night if the train, maybe ends just before 9 p.m.
Yeah. So a lot of data came through. Those heat maps were very, very interesting. But what we picked up very quickly was that we remained an essential mover of people who didn't have a car.
Sure.
And one really interesting kind of bit of data that came out, the waves. You all remember the waves, right? Well, hopefully we can forget about them soon. The number of people who used the minibuses, these are contracted minibus taxi association contracts, never dipped with the waves. So what does that tell you? That tells you that these are people who can't afford not to go to work or wherever they were going to. And the second thing it told you about them is that they had to, that was their mode. They didn't have an alternative. They couldn't go into their own car or any other alternative. So that kind of changed our business focus. We're doing much more contracting with the minibus taxi associations now. We're scaling down on bigger buses. So these things really change our approach to business. As to your point about the hours, our commuters have different timetables now. It used to be very concentrated peak movements to and from work. People generally didn't stay out late, or if they did, they used Uber or so. Now it's fairly constant throughout the day. People are moving differently. We don't have all the answers, but we are investing in the technology of finding out where people are coming from and going to, so that we can be much more agile in being part of their trip, rather than just a train that runs from A to B. It's a fascinating journey.
Are you going to have a nighttime service? I mean, we just had a big sporting weekend.
Yeah. So won't it be good to go back to that? We'll do it as and when required. It's quite expensive to run an after-hours service. You can imagine running big, heavy trains up and down. But for big events and for ones that we can support with our buses and minibuses, dying to get back into that game.
Yeah. Ian, let me bring you back in here, because I guess a lot of what the Shared Value Africa initiative tries to encourage is this idea of systems-level thinking or systems-level approaches to trying to deal with very large and seemingly intractable challenges. I'm quite interested in your reading of where we are as a continent, one in terms of the process of unifying our 54 nations on an economic basis via the AfCFTA, but also, I guess, at a national level, some of the critical actions that in your view could catalyze decades on decades of a sustained growth as we near, towards 2063. And we often talk about 2030 in this country, or 2030 is not even a decade away now, so maybe 2063 might be a better marker. Some of your thoughts on what those actions could potentially be, and it might be actions in the public sector or even actions of a collaborative set of stakeholders. What would some of those be?
Yeah, I think we've got in honesty, a long way to go in that sense. I think some of the drivers I spoke about earlier around demography and the market development, almost in market, are likely to be the real drivers in the short to medium term. I think the cross-continental pieces may help us to amplify some of that impact by essentially improving the mobility of goods and services across borders to different markets and allowing specialism, I guess, of providers who can provide certain goods and services for a bigger target market at scale. But the challenges to that, I think the first and simplest is logistics. And I think a speaker in one of the earlier panels was referring to this point about the difficulty of moving physical goods across the African continent is enormous. Whether it's to do with country border issues or simple road infrastructure and transport issues, or the consistency of the rail infrastructure across the continent, there are a lot of logistical challenges. I would put that as item one, and probably, in a sense, the easiest issue to resolve. I think the principle of a mutually acceptable sort of common currency and the policy certainty that needs to come across the regions for businesses to confidently take long-term investment decisions without having to put enormous risk premiums on their capital. Those for me are the big three, essentially. So sure. There's a country risk kind of premium that I think many of our continental countries attract in global investment markets because of history, because of country policies and shifts in the sands of country policy that increase uncertainty for investors. I think overcoming that and overcoming the infrastructure deficit are the big things from my perspective.
Okay. Peter, same question to you. 2 or 3 catalytic actions that can ensure that the continent is on a sustained footing and we're able to grow our economies, and while also dealing with many of the socio-economic challenges that we're faced with.
Yeah, so for me, the one area that we need to do something material is how we support small and medium-sized businesses. The SMEs and micro SMEs are at the heart of the continent. And sometimes we focus, and I've worked in global businesses, so we focus a lot more on the large corp. But actually, if we all can, even through the whole shared value initiative, can think about how do we channel our focus on supporting SMEs, access credit, deal with challenges in terms of access to markets and so on. And digital ecosystems can help. We have seen as we start through the recovery process after COVID. We've launched business apps, and the level of penetration of that is incredible. In this country, for example, we have something called Lipa na M-Pesa, Pay with M-Pesa. We've seen that double the number of merchants who are using digital payments platforms. So just initiatives that are targeted at supporting and empowering SMEs will make a big difference across the continent. The second, just going back to Ian's point, is also to iron out some of the cross-border elements, which whether it's policy or regulatory frameworks, so that you have regulators working together rather than being very in-country focused. because if you want to launch a financial products, you have to go to each regulator in each country and understand the requirements. But if we did it at a regional level, it will make a big difference. And we see it with cross-border regulation. And then, of course, the final one is this collaboration and partnerships, between telcos and financial services and insurance and so on. So because we cannot, the whole silo piece about working at an industry level doesn't quite cut if you go across border. So we need to partner a lot more and collaborate a lot more across border, across industry.
Thank you very much for those comments, Peter. William, I guess same question to you, and I certainly hope in your response there might be a vision of a high-speed train moving from Johannesburg through Bulawayo to Lubumbashi and all the way to Addis. Yeah,
I'd be happy to do that feasibility study. but I think where I'd like to go in my response is around the need for partnerships. Yeah. I've spent a lot of time in government, and it won't be a surprise to anyone to hear my view that public and private sectors do not understand each other. And the concept of a shared value system is so important in this. And I'll give you two small examples. So government always says private sector is just in it for profit. And profit, believe me, is a swear word in government, right? It's a bad thing. But if we can make it profit with purpose, that changes things. Profit that's invested in communities and socioeconomic development changes that discussion and that paradigm enormously. It's not extractive anymore. Then for me, the challenge in government is about upping its game in a governance stake. I mean, what private sector business would want to partner with a municipality that couldn't even get its financial statements in order? It would be hard to have a trust relationship, right, if that governance and ethics environment isn't correct. So for me, the call to arms is to start talking again and to try and establish that shared value system. I don't think there's a problem with the objectives. It's infrastructure, it's economic growth. It's what we as public and private have to do to enable that. And I think they're relatively simple things to say. They're very hard things to do, but the discussion's got to start now.
Thank you very much for that, William. And Adeolu, you have the last word.
Sure. Thank you, Ayabonga. So I'm a professor's daughter, and in addition to that, I'm a Nigerian, and Nigerians care about education, particularly for our children, and this is how we think that we can succeed. And I believe that there's truth in that. So we, as Allianz, are very focused on capability development, not just for our employees, but also in the wider social atmosphere. And so because of that, we've actually developed an online MBA scholarship. First time in Allianz history. We started with the African continent in partnership with ESMT Berlin, which is a premier MBA program in Germany, based out of Berlin. And we have 10 scholarships. We opened it up to the entire continent, so to say, of course, focus on where Allianz is actually based. So Nigeria, of course, contended for that. We had a number of people who were eager. And this is the part that makes me proud. One of the things that makes me proud this year is that one of the winners is a Nigerian. Maiwa Adebile, who is the founder of Asheke Foundation. She actually flew from Abuja to Lagos because she was just so thankful and grateful for this opportunity that she never thought she would have. She's the first of her family to go to further education. In fact, when she first heard of the program and heard that she won, she actually didn't believe it, is what she told me. She thought it was a hoax. So I said, okay, I'll just try and I see what happens. Yeah. And the fact that she won, she was, and the experience and exposure that she's getting to outside of Nigeria, outside of Africa, and understanding that she's not alone. So a social entrepreneur in Abuja is now being exposed to other social entrepreneurs in as far flung as the Middle East, to South America, to the US, etc., and building up her leadership skills so that she can influence her circle.
Sure.
And that influence just spreads from there. So I think really for me, capability development and even just going into programs that go on one by one is really how we will succeed in Africa.
Awesome. Thank you very much, Adeolu. And also want to thank some of our panelists who've also joined us with us, William, Peter, and Ian. And maybe just a parting shot before I hand over to my friend Simba. I don't know, Adeolu, if Tiki told you of the Spelani dress in South Africa.
No, I don't.
And I think your print today looks very much like the Spelani. So I'm certainly hoping that there's a tradable opportunity for some exchange, in fabrics least of all, from the northern parts of South Africa, where the Spelani is worn by Xitsonga women. So certainly I hope Tiki will be able to give you just a crash course in where you can find a Spelani, and hopefully you can take it back with you to Nigeria.
Excellent.
So thank you very much to you, Adeolu, to you, William, and to Peter and Ian, who are joining us on Zoom. And I'm going to hand over now to my colleague Simba, and it seems it's a contest of the beards, Simba, so I'm not sure. I guess, we do have some oils we make in South Africa, so I can certainly share those with you as well.
I think I've given up. No. Thank you very much, Ayabonga. Thank you, Adeolu. Thank you very much, William. And I remain a faithful component of the Gau train. I think it's more efficient than these big German and, British marquees of vehicles. But thank you very much. And I think for me, I think what.
Oh yes. Look at Simba chucking us out now.
Before I hold you prisoner. No, I think it was a very insightful discussion. And once again, thank you to the panelists, for Peter and Ian, who joined us online. I think it was a very insightful discussion, and I think what COVID and any crisis teaches us is that any people-centered business that takes care of its society, takes care of its clients, and takes care of its employees is one that the market will remember years down the line. And it's sort of like a strategy that builds customer loyalty. And also, when you were talking earlier of the free trade area, and Adeolu was talking about issues of manufacturing, trouble in getting goods, it sort of speaks to the concentration risk of everything being manufactured in one location. And maybe as Africa, we need to look towards that as well, to see if we can establish our own value chains between countries, which again talks to the issues of the free trade area as well. COVID also brings about new types of risks. So if the middle of Sandton is empty, and we're seeing the same thing in Zimbabwe as well in the real estate sector, what do we do with all of these buildings? Some of them that's got a very young shelf life of 5 to 10 years. Do we look for new ways of utilizing them? Do we look at new ways of working? Do we now look at new ways of movement of people? Does this mean that businesses now have to be more agile when they think up of their business strategies? Are we now talking of a 15-year, 10-year business strategy? Are we not talking of a 5-year? Are we talking of a 2-year? What is the decision-making process and the governance-making process? When we talk of private-public partnerships, for my sins, I've done work with the development sector, UN, and I'm also have a governance role in a state enterprise. And I've also noticed that profit tends to be a swear word. And the private sector guys are usually the enemies because we're more pragmatic and we're quick to the ball, say what works and what doesn't. But I think the more we talk to each other, the more we balance things out, I think there could be great opportunities there. I think these would be my comments, and I'll get your thoughts, Mumbi.
Thanks, Simba. I'm almost wondering what to add after that. I think there's so much that's standing out for me. I think especially what Peter Ndegwa reflected on, again, as a Kenyan, the importance of that digital infrastructure and how M-Pesa is a barometer, really, for how our economy is doing. I think it's thinking about how do we then harness that across Africa. This idea of long-termism, I know we've also talked a lot about this with Tiki and others. How do we change the narrative so that businesses, governments can approach different things, different